Hi class. In this video we're going to look at an example from chapter 4. We're going to work through a job order costing system or problem. So as an example we're going to look at this one on the screen. So Durham Company uses a job order costing system. They're giving us some transactions to work through. And then the first thing we're to do is determine the over-applied or under-applied overhead for the year. So to do that, and I've kind of set up a little calculation here, so a little bit easier than y'all having to do it from scratch. But we need to work through each of these items up here and decide if they have to do with overhead, and if they do, to what extent. So up here on number A, or letter A, it says raw materials requisitioned for use in production. It tells us there that 80% of that cost is direct and 20% is indirect. So we know that 20% of that $59,000 has to do with our indirect cost. So if we did the math on that 20% of indirect, it's $11,800. Oops, and that's raw materials. And that's just the indirect portion of that. So of the $59,000 of raw materials that they've requisitioned and used, they have charged, if you will, 20% of that to indirect cost, or allocated. Factory utility costs incurred $16,500. Factory utility costs are an indirect cost of production, so 100% of that is indirect. So we're going to put $16,500 here. And depreciation recorded on plant and equipment was $31,800. It says 3/4 of the depreciation relates to factory equipment. The remainder relates to selling and administrative. Now, $31,800 of depreciation. Depreciation is an indirect cost, but we only care about the part that has to do with the factory. So 3/4 of $31,800 is the indirect cost that was allocated for factory overhead. So we did the math on that. Taking 75% of the total depreciation would be $23,850. And then let's see, we've got cost for salaries and wages. We've got direct labor, indirect labor, sales commissions, and administrative. So the bottom two are selling and administration. So they don't have anything to do with the factory, direct or indirect, either way. So we can just kind of disregard those for now. Then we have direct and indirect, and of the two, I think we can figure out which one is the indirect labor. So $19,900. And that's our indirect labor. Let's see what else we've got up here. We've got some insurance. Insurance is considered an indirect cost. It doesn't relate directly to the cost of whatever it is we're manufacturing. So this is indirect, but 20% of it has to do with selling and administrative. So that doesn't relate to our indirect overhead cost for the factory at all. So we need to calculate 80% of $6,800. We do the math on that, it's $5,440, and that's factory insurance. F has to do with selling and administration, so it doesn't relate to this question. G is just a point about how much they had allocated, so nothing additional allocated in G. H and I have to do with the cost of goods, so neither of those has to do with indirect cost. So we have now identified all of the indirect costs that were allocated, so we can sum those up. We have $77,490 that was allocated. So let's see, that's all right. Now up here, somewhere. Oh, I'm looking too far up. Manufacturing overhead was applied to production. The company applies overhead at the basis of 120% of direct labor costs. So these are the overhead that was, whoops, and I've got that mislabeled, incurred overhead. So all of these were actual indirect overhead costs that were incurred. Allocated, it says, was 120% of direct labor costs. So allocated overhead equals, and we've got direct labor, $59,000 times 120%, so that's 1.2. Got my equals sign in there. So $59,000 times 120% or 1.2 gives us $70,800 worth of manufacturing overhead that was allocated or applied, either way, however you want to term that. So if we've allocated $70,800 and we actually incurred $77,490, we under applied that overhead by the difference in the two. So let's take the $77,490 and subtract out the $70,800. There's our $6,690, and that amount is for the overhead that was under applied. So this is actually the answer to part one. So we've calculated the amount of actual overhead that we had. We've calculated the amount that we allocated. Oh, I've got that plus there. We allocated based on a formulaic percentage of 120% of direct labor costs. So this is the amount that we allocated. So if we take the amount we incurred less the amount that we allocated, it gives us the difference, and we just then have to figure out whether it's under applied or over applied. So if we've incurred more than we've applied, then we've under applied. If we incurred less than we allocated or applied, then we've over applied. So this is the answer to requirement 1. Requirement 2 says prepare an income statement for the year, and it gives us a hint. It says no calculations are required to determine cost of goods sold before the adjustment for over or under applied overhead. So that didn't make a whole lot of sense to me until I started working through it, but I put it up here just so I wouldn't forget to address that. So we'll come back to that part. So I've kind of got the format set up in my template. So we're going to start with sales, and I believe that amount was given. Let's see if I can find it. Here. Item I, goods that had a cost of $139,000 to manufacture according to their job cost sheets were sold for $238,000. So this is your sales. So we don't have to do anything to calculate that. Our cost of goods sold, and this is where this no calculations are required to determine cost of goods sold before the adjustment. So what they're saying is the cost of goods sold was given to us, but it's not quite right because we under applied our cost of overhead. So we're back to this goods that had a cost of $139,000 according to their job cost sheets. So according to what they estimated when they estimated the overhead and applied that throughout the period, these goods cost $139,000. But we actually spent $6,690 more than what we allocated. So we need to increase this cost of goods sold by the amount that is under applied. So let's see. Let's come down here. That is $139,000 plus $6,690 that was under applied. So this is the formula for our cost of goods sold. So if you do the math on that, it's $145,690. So our gross margin is going to be our sales less our cost of goods sold. Oh, see, that didn't work out right. I've got a minus in there that shouldn't be there. That looks better. Our selling and administrative costs, we actually have to, again, look through each of those transactions and try to pick out our selling and administrative costs. So, I'm going to scroll up and pull those out one at a time. So we've got selling and administrative, as far as if we worked it through here, raw materials has nothing to do with selling and administrative, so we can just skip A. Factory utility costs, we already included that in our indirect cost. C was depreciation. Some of it's on plant and equipment, but the rest of it is in relation to selling and administrative equipment. So part of that does apply to our selling and administrative costs. So 25% of $31,800 is selling and administrative costs. So let's just start a little list over here. So if we calculated the cost out for selling and administrative, it would be $7,950 for depreciation. And let's go back up here again. Cost for salaries and wages. We've got a sales commission here, and we've got administrative salaries here. So we actually have two items in selling and administrative for salaries and wages. So let's see. Our sales commissions were $11,900, and our administrative salaries were $44,000. So this is sales commissions, administrative salaries, and we are all the way down to E. Insurance cost, 80% for factory, 20% is selling and administrative. So 20% of $6,800 has to do with selling and administration. So if we multiply that 20,000 out, we get $1,360, and that's insurance. And then we've got some miscellaneous selling and administration, $19,900. And then let's see, manufacturing overhead doesn't have to do with selling and administration, and both of the last things have to do with cost of goods sold, so we can just skip those. So that looks like all of our selling and administration. So if we total those, we get $85,110. So let's put this over here. So to find our net operating income, we're going to take our gross margin and subtract out our selling and administrative costs, which gives us a net operating income of $7,200. So this here is actually the answer to requirement 2. Well, this whole chart, but then our bottom line of that is the net operating income. So that's all there is to this particular problem, which is very similar to your homework. You'll have different amounts, but the rest of it should kind of look the same. You're welcome to use this template if you like. I'll put it up in our classroom so that you can take advantage of it if you would prefer to do that. As always, if you have any questions, feel free to give me a shout out and I'll try to help.